Now, when you see some major important signal in gold, you really do want to see it backed up by the silver chart. That really does help to inspire confidence. So, looking at silver going back to 2008, 10-year trend line, we are touching it now. If I actually zoom in, to be fair, we're actually just holding a little bit below it, but it's not significantly, not significant enough. The trend line is at 1555. So, on Friday we closed less than 20 pips below it. Not a big deal. We could easily get back above there on at the start of this week, meaning this is a false break lower. Look how the month before. Look how in July we spiked below it and recovered. So there's no reason we can't do that in August. Spike below it and then close the month above the trend line again. Who knows? We might even get a long lower wick. Anyway, no point speculating. Let's see what happens. But you can see that, so this is another very important trend line in silver. I think on the weekly chart we're probably significantly oversold. We certainly were in gold. Yeah, we're getting oversold there on the slow stochastic, which is always helpful as well. Even last week we even had a doji, which helps to balance things out a bit as we look for a bounce in silver. I don't think the daily chart's telling us anything, but we'll have a quick look. No, not really. No, nothing at all actually. If you're just looking at the daily chart, you really wouldn't be very bullish of this at all. In fact, you probably want to be selling into any recovery or selling on a break below 1513. So yeah, you've got to pay attention to the longer term chart, which is indicating that silver and gold could turn around and rocket. This could be an incredibly low risk buying opportunity in those, and to me these look like the golden, pardon the pun, opportunities of the week. Oil, I'm not going to show you the chart because it doesn't make any sense to me at all. For some reason I don't seem to be very good at charting oil, although I do have a lot of subscribers for it, but I can't really seem to make any sense of it. Anyway, now then, this is the E-mini S&P, which I thought was forming a head and shoulders last week. I could show you on the short-term chart. No, what's the point? It failed. Anyway, I thought this was a shoulder, head, shoulder, and I thought once we broke 2800, we were going to head south. Now we did head south, but we only got to 2791, which was the first target on the break of the neckline, and absolutely rocketed. So completely caught me out this. If you were short from 28, the high 28 teens to 28, 29, 30 area. Actually, I know that some of you did sell there, and some of you did take the profit. Well done. I didn't, and I ran this and lost a little bit of money on it. Anyway, right, caught me out. This big engulfing blue candle, and then we headed higher on Friday. Still not sure why. Baffles me, this market. 28.41.5 was where we got to, and it doesn't look weak. It does look strong. We closed right on the high, so we could continue higher this week. 28.47, 28.49.5 is the obvious target because that is the July high, the previous swing high. Do we get a double top there? I don't know. We'll have to wait and see. If we get a candle with a long wick and the sellers come in and push it down and we get some sort of hammer or whatever they're called, shooting star, then that would be a double top signal. If we keep going, we've got trendline resistance up in the mid 2860 area, so that would probably be the better sell. I wouldn't speculate on a double top, but I'd wait for the trend line. And the trend line, of course, coincides quite closely with the all-time high at 2878. So that would be really interesting. Do we get a mega double top pattern? I mean, it really would be a big double top pattern. There we go. I've got a few things to say about this actually. Stock markets see increased volatility at peaks. Now, there's no doubt that we've seen some increased volatility, especially in the first quarter. Okay, yes, that volatility has slacked off a little bit, but it's still more volatile than we saw throughout the bull market. You can see that. So, does this volatility indicate that the market is peaking because the bears are stepping in and becoming a bit more forceful? Do we rally up to the 28, 60, 70 area, reject the trend line and reject the all-time high for a huge double top pattern, which would quite honestly, potentially, well, it would certainly signal a significant move to the downside. You would be looking at 10-15%, possibly more. But we'll come to that if we actually get the top. Anyway, this is a real low risk trade to sell on the approach to the 2860, 2880 area, because if the market does crash, obviously you're going to make an absolute fortune. Look at this divergence. Again, I don't do trade solely on divergence. It's impossible to time it. Markets can diverge for a lot longer than you can hold a position that is going wrong. But it is interesting to note, isn't it, that we're having a good old rally up and these stochastics are just not confirming the strength in the market. So, all in all, I guess it's a wait and see situation. If you're absolutely desperate to sell the market and you've been looking for a reason to get short, you know, there's all sorts of speculation from investors who are far more intelligent than me, saying that the market's well overbought. You know all the stories, all the debt bubbles and everything else. Maybe this is it. Maybe this is it. Maybe this is the week before the markets head lower. I wrote an article last year about how the markets usually crash in the autumn. So everyone thinks, oh my God, it's October, you know, let's be careful, the market could crash. But what you don't realise is the markets have already turned by the time the autumn comes. The markets actually turn in June and July. When there's an autumn crash, go back and have a look at your charts. The market's already significantly sold off from the summer. The summer is the peak. And I just wonder, is August going to be the peak and followed by, I'm not saying a crash, but a significant move to the downside? It does make me wonder. Anyway, we'll have to just wait and see, because right now there's no indication of weakness. We'll just have to look for the candles and look for the double top pattern and look for all the confirmation that we need. So don't go piling into a short, but do bear this in mind. Now, on that note, the DAX, which I guess is the biggest market in Europe, is also showing a significantly negative pattern. Okay, here's the run up from the crash, from the GFC, global financial crisis, when we bottomed in 2009. Nice big bull run. Now, is this a head and shoulders pattern? It's starting to develop, and it's significant because it's a year-long pattern. You see, this pattern's built up over a year. The bigger the pattern, the more significant it is. Now, I'm not going to show you the daily chart. That's not relevant. What I am going to show you is the weekly chart of the DAX. Okay, so look, you have to wonder, right shoulder, head, and the head's a double top. I like these. I like it when you see a double top in the head. You get that. Pull back down to the 100-week moving average. Nice bounce off it. Okay, we've bounced off it again. We're seeing this could still be within the scope of a right shoulder. Of course, the neckline is all the way down here, so we've still got to have a significant drop before we even test the neckline. But I wonder, we start moving below the 100-week moving average, which is in the 12,200 area. Then we test the neckline. Now, the neckline is at the moment at around 11,600. So it's not until we break that we get the sell signal. So you know, we could easily drop 1,000 points before we even get the sell signal. And I'm not saying you should sell it now either, because we don't have the sell signal. Does look like it's worth throwing a little trend line in there though, doesn't it? So there you go. If you were to try a short, you want it to hold below 13,000. And I could actually put a little trend line in here too. There we go. Got a little triangle pattern there. So yeah, we start breaking below 12,200. That's going to look quite negative. Anyway, you see what I'm talking about. Let's just see if this head and shoulders pattern develops. And of course, if we get a double top in the EMA S&P, that starts to head low. This is going to drag it down. Now, if we do, this is a long way off, of course. But if we were to break 11,500 and the pattern is confirmed, then we have a drop in the region of 13.5. Take away 11.5. Okay, so we're talking a couple of thousand points off from 11.5. We could be down at 9.5. That would be a significant correction. That ties in quite nicely, doesn't it? Look, with a 38.2% fib at 9,700. So that would be a nice correction for this market. And then I guess you'd be jumping in to see if the bull market continues. So some interesting points there. Just keep an eye on them.